All right, y'all. So tonight's class is going to be pretty short and sweet. I really just wanted to kind of walk you through, how I find trades. If you're finding it hard to know what to look at, excuse me, I'm going to show you all just a couple ETFs depending on which sector you prefer. Um, but if you like trading industrial, say oil, you can look at XLE. So and the best way to see what's in here, like I said, go all the way to the top holdings. And you can see that this is mostly oil, right? So if you're big on oil or trading industrials, that's where you can go. Another one, XLF, that's going to be your financial sector. So it's going to be your banks and everything. So if you like trading banks, this is where you're going to trade. XLK, let's see, is the tech. So if you like trading Apple, Microsoft, stuff like that, there's even NVIDIA in here, PayPal, tech stocks. You can look in this sector and follow those. Another one, let's see, I think it's like XSD. Let me see. Now the XSD, this is going to be your semiconductors, right? So your chips, NVIDIA's in here. If you actually look at this, notice AMD's been going strong right now as well. It literally broke that resistance at 100 and just started running, right? So that's one thing you want to notice is whenever you start to break these areas of resistance, right? We've been here before. So if you show signs that you're willing to break this level again, it's off to the races, really. So always when you see these points of resistance coming, know that if we do show closes over that, that it will go ahead and push through that and on to new highs. So another one, XLY, which is retail. So if you like trading, say like Target, Amazon, Home Depot, Starbucks is another stock that it's just like one of those things where like if you're cracked out on coffee, you like drinking coffee. I mean, this has been strong over time, right? So definitely trade what you know. If there's something that you're passionate about, make sure you're focusing on that sector or that particular asset, because there's ways to make money, right? For me personally, I trade stocks like Apple, Alibaba. I traded just because you can just excuse me. I trade Alibaba just because when it gets in certain price ranges, it has these bursts out of there, right? So once you start to understand a stock and its price movement, you can trade it a lot better. And don't try to trade the entire market. Focus on what it is that you like. Um, and another good way, like I said, always follow the indexes. So if I'm looking for something that's down, I can literally change this to low to high in terms of percentages and see what is actually getting hit. So we can see that the airlines have been taking a hit recently. Energy sector, so your oil and stocks like that are taking a hit right now. Banks, another thing that took a hit, right? So this allows you to keep up with the sectors. Now, if you want to see who won, you can scroll all the way to the top side of this list. So we can see here that the short shares are winning. So these are all short ETFs. And the reason why they went up today is because the market went down, right? So the only way I actually made money today is because Amazon went down. Oh, and speaking of that, SPY, y'all. So Amazon, let me actually show you this move Amazon made. So I can turn on and off the pre-markets or the extended hours. Excuse me. So right here in extended hours, you can turn it on and you can turn it off. Okay. And so when you turn it off, you see gaps. All right. So let me take the indicators off, the WAP off, Bollinger Bands off. So this is what you see when your extended hours are off, right? You can actually see the gap. And you'll hear a lot of people trading gaps. Now, what's cool about this gap is that when it actually made this fall, this blue line was already here because of what was going on over here in the past when Amazon took off from here. Okay, so Amazon crossed this line, it came back to it, touched it here, and then from there it created this range that it traded within. So when Amazon fell, y'all, this blue line was already here, and look to where it fell. It literally fell to this line, right? But so if you turn on the extended hours, what happened was that Amazon dropped over $200, I think. Yep, $248 after the bell. Okay, now the cool thing about this is that it did that drop within like minutes. Okay, so let me show you what happened. Like literally after the bell, it just dropped. And that was in 15 minutes. So you can see right here, that was within 15 minutes. Now, within the time that it did that, you can literally still trade the SPY. Okay, so the SPY, I came and bought a put here because I saw Amazon drop, and I had no clue that you could actually continue. You have about 15 minutes to trade the SPY after the market closes. So if you're in the SPY, or let's say let's look at what's in the SPY, right? So top 10 holdings, you can see that Amazon affects this. Okay, so if you see something like Apple, Microsoft, Amazon, Facebook, Google, Tesla, any of these top holdings right here take a hit in post aftermarket, right? You can literally come short the SPY. And that's exactly what I did. I was like, well, if I can still trade options within this 15 minutes right here, I just went and bought a put because I was like, I'm gonna see if this works. Y'all, look at this. It just completely fell until the next day, opening up right here. And I immediately sold at open. I bought like an $80 option put right here. And the next day I sold it for like 200, you know. Excuse me. So definitely take notice of things like that. You know, especially if you trade Apple, Microsoft, Amazon, Facebook, things like that, that move and have high volume. Make sure if it falls or goes up that you can still react with the SPY. Okay. And it's also great to watch the SPY as well, so you can understand what's going on, right? So why is the market going down? Because it just did a death cross right here. Okay, so on the MACD, you can see that this orange line crossed the signal line, which made this death cross right here on the MACD. Which also you can see the stochastic is being pulled down. So you can see why these two bad days happen. So you can be prepared for that, right? So, I mean, it's not even about being so reactive in terms of saving your portfolio, but more so in how you can hedge that, right, with a put. So when you start to see signs like this, then you can be aware of that. Now, another thing that I noticed, so if you turn on the EMA or your moving average, whichever one you prefer, but if you notice the 50, I noticed that on the 19th, 18th, around these days, it kind of retraces back to this area, right? So basically every month, this thing decides to have a little pullback. All right, so that's one thing that I'm noticing. So definitely keep an eye out for patterns, right? So I can assume that by the 20th, this thing is probably going to be making some moves back towards in this direction, right? So always be aware of that. But even on things like this, where you can see this, the MACD is high and starting to curl down, crossing that signal, boom, like literally the market just gapped down. Okay. Now, when the market does gaps down like this, always be prepared, right? Like I always try to tell people that when the market is red, you should be looking for opportunities, right? And don't rush into them. Go chart them, right? Go make sure that their opportunity is right for you and the timing is right. Because if you try to rush it, you know, and let's say you go all in because you think you're at the bottom, and then they spend another day being pulled down, and now you don't have as much capital to leverage yourself in a better position. All right. So always scale into your position. Don't ever go all in at once. Make sure that you're like buying one contract, seeing how it goes. If it works out, you win. right? If it doesn't, you have enough opportunities to buy more contracts to leverage and average that down. All right. So always be aware of these types of patterns. I actually just noticed this, but I mean, even on a day where it gaps down, notice when it gaps down from these, the next day, the market, boom, jumps up. Next day, market jumps up, right? So that's why I say always on days like this, don't get discouraged, right? Look for opportunities, and especially if the stochastic is resetting, right? So if the stochastic, the momentum is pulled all the way down, then we have an opportunity to see, all right, cool, I want to bounce back with it. So be conscious of these things. The market, the SPY did just do this death cross, which is causing these types of days. So just be cautious of it. I know in particular, September was probably one of the worst months for me last year, and I wasn't aware that it was coming. So I just want you all to be aware that these are cycles that these stocks go in. So be very cautious of this. What's funny is that you'll see a lot of news right now saying that the market could pull back 15% in the next month. And it's like, of course, because that's what it does, right? Things just can't keep going up. We have to have these healthy pullbacks, which make for bad news, right? But if you don't know that it's coming, then you assume it's bad news. And I don't know when the market's going to come back, but essentially, you just have to be patient and wait for that opportune time. And the best way to do that is charting, right? So be aware of that. The best way to find different trades as well, like I always go to bar chart, right? So, wow, AMD's been going heavy. Honestly, I've been seeing a lot of people profit from AMD recently, which has kind of just made me just like, all right, y'all got it. You know what I mean? You know how to find the trades. Because I've been seeing a lot of you all profit off of whatever you trade, right? So seeing that lets me know that, all right, my goal is accomplished. You all understand how to look for stocks, how to gauge market sentiment and everything. Because even in here, you all can find ETFs, right? Close. But on most active, you can look at the ETFs as well. So now, when I was telling you all about people trading the VIX, I believe this is it, because I remember short-term futures VIX was popular. So let's type that in, VXX. Okay, this is how you do it. This is how you trade the VIX. I don't know what's going on with this chart. Oh, because it's futures, but you can buy options available. Okay. Never mind. VXX. Let's see. VXX. Yeah, looks like it. I don't know how to, I don't know if maybe options aren't available for this on Webull. You have to use another platform. But always pay attention to these types of things because if people are, let's say the put call ratio raises on the VIX, that means that people are expecting the VIX to go down. Okay. So as this rises, that means the market is getting healthier. As this goes down, that means the market is being betted against. Okay. And the same thing with like SQQ. Right now, you can see that SQQ is low. That means that basically nobody's buying puts against this because the market's at like all-time highs, right? So really, this is a sign to say that how far can this go? You know, so the fact that people aren't buying puts against this means that they aren't necessarily saying that the market will continue to go up in this case, right? Because this is the inverse. If this number goes up, that means that people are wanting the market to continue to go up. So if you see this number spike in terms of the put call ratio and the SQQQ, that means that people are expecting the market to get healthier. Now, with this number being so low, that means that people aren't afraid that the market could go down. Okay. Because if you wanted the market to go down or you wanted the market to go up, you would buy puts against this. Okay. So, like if the market fell and this SQQ price goes up, then you'll see shorts on this because they're like, okay, well, the market fell. Well, it's got to go up from here. And you'll see this put call ratio increase. Okay. But you're actually seeing the inverse of that, right? That means that the TQQ and the QQQ, the QQQ, not so much, but the TQQ, you can see that it is heavily, it's literally 1-to-1 right now, which means that, I mean, people like me, I'm not even trading options right now because we're at like we're consolidation to me. You know what I mean? You got stocks like AMD and stuff like blowing through highs and stuff that are really holding the market up. But outside of that, if we look at the net inflow, um, that's decreasing right now, right? So I'm certainly not about to hop in the market doing calls, you know? So just be very conscious of what you're doing right now. Most importantly, be patient. I mean, I say all of the indexes went down today. Yeah. So I'd say be very patient and cautious of these things that we see. I know when the market isn't doing so healthy, crypto usually kind of gets a rise out of that, as you can see. So as the market kind of took a couple of dips, this gets pulled up, right? Because people are like, okay, well, the market's exhausted. I'm gonna go play with crypto, right? So definitely be cautious of how these things sort of teeter totter, right? And that being even sectors, I don't keep up with this as much, but there are things to notice out of this, right? If financials are down, some other sector is going to get a rotation. So when you hear about the words rotation, like sector rotations, that's essentially what that is. And you can come see that here. Like if you click all, it'll give you like, hey, these are the downers. It had this many downers in its sector and this many ups, right? So depending on what's not hot, so real estate's going down, energy's getting hit, communications, they pretty much never move really in terms of telecommunications and stuff like that. But technology, you can see that it's going a little stronger, utilities, fintech. So depending on which sectors are actually getting up, you can see others getting down, right? So if you want to keep up with that, you can. I don't do it necessarily because I'm not trying to trade the whole market, right? Essentially, what I want to do is just focus on whatever it is that I'm particularly trading or watching, right? So let's go to stocks. And like I said, the best way for me to do that, under my watch list. Okay, so I have a watch list that's called indexes. And these are essentially are just watching different sectors. Okay, so I have different ETFs and indexes in here. And this is how I keep up with the market, right? I know that energy is getting hit, airlines are getting hit, banks are getting hit, cannabis took a hit, right? And this helps me find where I can find an opportunity or where exactly is my position the healthiest, right? So if you're trading, this is XLK. If you're trading tech, you can see that, hey, we're hitting consolidation, right? So what are we hitting consolidation? Let's see the top holdings. All right, Apple, Microsoft, Visa, Nvidia, all of these things right now are at all-time highs and literally hitting points of consolidation. So just for an example, we can look at Apple. And you can see that it had that similar chart where we're hitting consolidation right here, right? So the market's saying that, okay, we're at new highs, but can we push it from here, right? So and be aware of where we have been, right? So if you enter a trade and let's say this trade starts to take off towards 150, well, we can get there, right? Because we've done it before. Now, what happens at 150? It reverses, spends the next 2 days just falling, right? So when you look at where we are right now, we're back at sort of that breakout point. So if we can't hold above these levels, then we drop back down in that range, right? And so be prepared for that. If we look at, this did the death cross right there. Stochastics look like it's trying to get pulled down as well. So be very aware of these healthy pullbacks, but don't be afraid of them. It's going to create opportunities for you to bounce back, really. So whenever the market's down, like I say, look for opportunities. And the best way to do that is creating a watch list with ETFs and indexes. All right. So just a couple, if you like solar, there's TAN. All right. Um, Communication, like I said, this barely moves. This is like AT&T, Verizon. Let me see. Yeah, T-Mobile, Comcast. Disney's good, but this is another one where, like, if you trade telecommunications or communication in general, you can watch this. But I do watch it just simply because I want to know what the market is doing, right? And you can find a lot of these just using this SPDR. Because basically it's like it creates different ETFs per sector, right? Um, and so we can see that, let's see, we'll look at the TQQ. Looks like it had a decent day. Nah, it went down, but still holding up here in consolidation. Like I said, everything's in consolidation right now. The whole market's at all-time highs and just floating up here. So I haven't been trading. I'm not trading in this. So that's really why I've been kind of quiet lately. And if you like trading social media, wow, looks like social media got hit. Let me look at this because it's snapping here. Yeah, let's look at Snap. Ooh, snapped off, didn't it? Golly. Still being pulled down these socials. Let's go back to social right here. So yeah, these are just a few ETFs that I follow. You don't have to follow all of them. You do want to watch the VIX though. You want to watch the SPY and you want to watch the QQQ. If you're into airlines, energy, stuff like that, you can watch the Dow. I don't watch the Dow as much because I don't trade energy, I don't trade infrastructure, I don't trade airlines really even. Now I'll buy airline stock, but I'm not really trying to trade the options in it. You really want to focus your options on stocks that are listed here, right? If you're not popping up here, it's probably best that you don't trade it because your spread is going to be really large, or the volume is not going to be the right volume that you need to make the money you want. So make sure you're focusing your trade on especially options here. And if you don't trade options, you still need to be watching this, like I said, because you need to know that people are betting against you. Um, let's see. This has a pretty, like, Nikola is high. Oh, now this is why this is getting puts, right? Nikola is dealing with the lawsuit where they drove the truck down the hill trying to say that it was hydrogen powered or something. So obviously this stock is getting heavily shorted. And if you like trading stocks like that are heavily shorted, there's actually a website called High Shorts. Uh, is this it? I can't see. Okay, yeah, High Shorts. Excuse me. So this is where you can actually come and see what stocks are shorted the most. So this is a great tool if you like that kind of stuff. I don't really trade short squeezes because you never know when it's going to get squeezed, right? I don't do stocks in general. When it comes to like GameStop, AMC, stuff like that, I don't trade that because you're just going to be sitting there waiting on the hype to be fulfilled. And I really don't have the patience for that kind of stuff. But these are companies that are highly shorted, right? You look at Riot, MSTR, those are both crypto related. And I'm sure at some point those shorts are going to have to let go, especially if crypto continues on its bullish run right now. But this is a place where you can at least see what's being shorted, right? Like most of these stocks are probably being driven to the ground right now. And then I'm sure a lot of people, I actually heard somebody on a call the other day talking about how they had lost on this, but they're probably expecting it to come back, right? But I don't trade stocks like this. But if that's your thing, there's a website called highshortinterest.com. Okay. So excuse me. There's a lot of different tools out here to trade. Like I said, a lot of people have been winning off of AMD, and you can see why the volume is here, right? So if you got this much volume in your favor coming in, wanting to see you over 100, it's best you not buy a put against this. Okay. And then I actually had a student hit me up too and was just like, man, I got hit bad trying to buy a put against AMD. All right. And like I said, when stocks get to these all-time highs, this isn't the place to try to short it. Okay. Because what's happening is that there's confidence, right? If we've been trying to break over 95 and then we did it and we back at 100, right? And then we broke over 100, that lets me know that there's so many people behind me willing to support me because we've been here before. Okay. So on stocks like this, you want to be very patient for a put because it's going to pay off in the long run. You know, if you're just patient, right? Because look at how much it has to fall when it does, right? So just be patient on it. Don't try to beat it right now. The best thing to do is try to get these things on a Friday. You know what I mean? Because like I said, on Thursdays, we can see where the leverage is for the weeklies. You can see that, okay, well, if everybody been buying calls this week, y'all got to take your profits. If the most of the volume is in the weekly for that week, y'all got to take your profits. And I'm gonna be patient. But when this falls, you know, let's see. Let's look at the super trend. And so we know the last point of resistance it had right here was about $94. Okay. So I know when this falls, it's definitely going to have a pullback to 100. That's a fact, right? Because we've already broken through this 100 range and went on a run. All right. So be patient on stock like this. Don't try to jump into them and try to buy a put before it's too early, right? Be patient. Be patient because like I said, when you all see that these things are breaking over resistance, it's not your job to stand in front of these stocks. All right. They will completely run over you. And then look at something like Tesla, right? I mean, I feel like the last time we looked at Tesla, the put call ratio might have been anywhere between 0.8 and 1, right? And now look at how much leverage has let go. All right. So if you look at Tesla, it is now broken over that resistance, right? And so they're holding themselves up here. All right. Now, if they can't hold this 700, you best believe we fall it back down. All right. So this is another thing. I wouldn't try to go rush buying puts on this thing. All right. We're breaking over resistances. And who knows how long we can sit in consolidation over these areas. Right. So be patient, be patient, be patient. Don't always run to get puts because the thing about puts is there's going to be at least 2 or 3 days that you can make money on a put. All right. If it doesn't fall too fast, too soon. All right. So you want to be patient. You want to give it a day where it didn't hold a level of resistance. And so for me, I would feel comfortable, say, buying a put if Tesla started to make its way back to 700, because I realize at that point it's got to give this back. All right. But don't try rushing in unless you're scalping it, you know, because you realize that when it hits these types of highs, they won't stay there for the day. But who's to say that Tesla can't, say, run to 750 tomorrow and then back down? Now, if Tesla runs to 750, I'm buying a put. And that's not advice. That's just to say that even if it did run that far, surely people are going to take profits just based on history, right? So be very careful playing puts. You want to be patient. You want to give it a red day first, right? Because if you see that we're on a healthy run, don't try to stand in this thing's way, okay? And now it is broken over this level. You are aware that they have broken through a resistance, all right? And if you're not charting, if you're not trading as well, come through and chart. You know, because if you're not charting, you're definitely going to be losing. That's a fact. So make sure you're coming through charting these. Like let's take a look at what's popping over here. Looks like folks putting against Amazon. What's light like? Dang, they got heavy puts on American Airlines. Let's check it out. What's going on? Well, we already know that the Jets ETF is down. All right, so we know that. So it just hit a long-term EMA right here on the 200. So yeah, at some point these puts gonna have to let go, you know. So let's take a look at American Airlines and see where the most of this weight is. So like I said, when you click on the actual stock, you can come under put call ratios and it'll tell you where the majority of that leverage is. Okay. And it's on this week. All right. So it's heavily put it for this week. So if the put open interest is this high, I can't wait for Thursday or Friday. Friday's going to be the best day, but Thursday we're going to see what this looks like, right? Because yeah, opportunities like this, let's go back. You want to come in on a Thursday and take a look at these numbers and say, where's the most leverage, right? Because if AMD continues to run for the rest of the week, I know by Friday it's got to come down because those people, whoever holding contracts, they got to take their money, So be cautious of this. Always come in on Thursday nights and check this out, because Thursday night is going to tell you where you can make a move on Friday, because Friday, these calls that expire, they get cheap. So it creates an opportunity for everybody to trade options, right? What would usually be $200-300, maybe even just $100, right? It's $30 now. It's $40 now. But it has the opportunity, if in the right direction, it can move in the money and it can turn from $30 to $100 per contract, right? Just because it was not in the money and it was losing value, and then you caught that jump, right? So like I said, when you look at the fact that most of travel stocks in general are being heavily put it against, what is it, Nikola, Snap, Twitter even, these numbers are getting pretty high. So be cautious of this, because on Thursday, we're going to see, have these numbers gone up? Have they gone down? Are people letting go of this leverage against them? And that'll tell you how you can act on Friday. And that's where I make most of my money, is on Fridays. I don't really even trade during the week as much. Maybe on a Monday if I feel like the opportunity is right, but for the most part, try to focus on just like using Thursday nights as a night for me to come in and check these numbers out and see who's got the most vulnerability in terms of leverage, because the week's going to be either good or bad for whatever, because everybody's going to be trying to ride that out for the week. All right. But when Friday comes, the real reality comes in terms of people having to take their money, right? Because they only have one day left in terms of whatever contract they choose. And like I said, let's look at AMD, for example, because really the put call ratio is in between right now. So, but we want to look at put call ratios over here. So you can see that it's starting to, a lot of people are willing to bet against it now, right? So on the general put call ratio, we saw that the number was only 0.40, which is why it's just going, because it doesn't have a lot of leverage betting against it. All right. But as of right now, this is telling me that right now, put call open interest is getting heavy on some puts. All right. It's about to be 1-to-1, meaning that every person that holds a call, it's a put against it, which means that I'm just going to be waiting on Friday. I'm not going to touch it until then. I'm not, because my thing is, these puts are going to have to cover. Let's say AMD just keeps on running for the rest of the week. These folks going to have to let go, which is going to send the stock to continue to rise. But come Friday, all these people I see making profits with these calls, they're gonna have to let go. They're gonna have to take their money or buy the stock. Your choice. You know what I mean? I can't see people exercising options. So be aware of these things. The information is available to you. You just have to know how to read it. All right. So we can see that put call open interest is increasing, which means that there are a lot of people that are waiting on this to fall. Right. And they're being very patient, it seems. People aren't rushing to buy or even trade the puts. Obviously, more people are doing the calls right now, which is why the stock is going up. But like I said, come Thursday, we're going to see what type of rude awakening we're going to be in for Friday, because at some point, the truth has to be told, and you can't just keep going up. So be aware of these things. Like I said, the information is available to you. If you have any questions, hit me up. I'm always here to help. But that is it for today. But yeah, you all please check out those the ETFs, and then go in there and research those different sectors and ETFs and indexes, and that way you'll be able to get a gauge of the market so you can trade better. Because a lot of times, if you find what ETF your stock is actually trading with, then it'll help you gauge whether or not you should hold that contract, or maybe you should get out right now, or you should get in right now, right? Because if the sector is doing well, then I have support from a whole industry, right? But if I see that my sector is going down, I can't expect for mine to hold it all, hold all the way. So definitely make sure that you're watching ETFs, watching indexes and everything. But I will see you all next week.